owning your own business is by far the biggest thing that you can do as far as tax advantages.
Hello, everyone, and welcome back to Quiet Wealth. I'm so excited to have two guests on board today, a married couple, Melissa and Eric Broughton, and they own the firm Busy Bee Advisors. So you're going to want to listen to this episode as we get pretty deep and entailed on all things taxes and how owning a business is going to make your life so much better with using all of the tax strategies that we talk about today. So be sure to listen to the end so you can figure out where to connect with Melissa and Eric as well, so they can help you with all of your tax needs. So Melissa, Eric, welcome to the show.
Thank you.
Thank you.
It's so great to have both of you here. It's not often I have a married couple on our podcast, and so I'm excited to hear from you both. But first, tell me about your journey, your own journey to business ownership. I always find these journeys really fascinating and where it came from and how you got to own your own company.
So it's interesting that one of the kind of key points that you discuss on your podcast is generational wealth. When I started the company in 2017, that was something that was a little bit at the forefront. And I say a little bit at the forefront of my mind because I knew I wanted to do something that left a legacy for our children or potentially could leave a legacy for our children. I just didn't quite know what that would look like. And I had been, 20 years working in corporate America in, executive level, controller, VP of finance positions, and working 60-hour week wasn't strange, sometimes more than that, and making a lot of money for other business owners, or at least helping them keep track of their money, right? We were on a cruise for my 40th birthday. We stopped in Mexico. It had been well planned. My employer knew I was leaving. To get off, I decided I'm going to check in with the office. And essentially the wheels had come off. My employer at the time had decided to borrow money from the payroll tax account. And time for payroll taxes to get pulled, the money wasn't there. It was something that he would somewhat regularly do, but I was always there to catch it, right? And so here I'm in the middle of the ocean, obviously not checking the accounts. And he's getting some angry phone calls. He's yelling at me on the phone. And I'm going to say we were a few pina coladas in, and I, on the spot, quit. And so it was that husband and I had been kind of talking about what's in the next phase. I had some discontentment with the position. It was a little bit scary to walk away from that executive level salary, but I felt like I was missing everything with our kids. And so I quit and then looked at him and he's like, well, we got this, because I'm married to the best guy in the whole world. And I don't say that sarcastically. We come back from our trip and it's time for kids to go back to school. They had been off of school for the summer. Time for kids to go back to school. I decide I'm going to go for a run and figure out kind of what this next journey for us looks like, or next part of my life looks like for us. I go for a run and I fall. I broke my face, essentially. So I shattered all of my teeth except for the top 4 and the bottom 4. Nothing helps you figure out a business plan other than really not being able to do anything except for be still. And so I was 6 weeks kind of forced to be still. When I was back and kind of recovered, I gave myself, I think it was like 2 weeks to find my first client. I built this business plan while I was out of capacity, I guess you could say, or recovering. At the 11th hour, that first client landed. All the feelers that I had put out kind of came back and started the business. 2 years later, decided to, and we joke because it was like a marriage proposal, but we're out with friends pre-New Year's Eve. We're out with friends. At the time, Eric was a nurse. Every year would ask us to do things with them on New Year's, and we never could. And I guess I just kind of felt sick of not being able to go out with friends on New Year's. And I looked at my husband and I said, I want you to quit. I want you to quit. I want you to come and work with me. And didn't really expect for him to say yes, but he did. that kind of changed the trajectory of our lives in the most amazing way. That's kind of our origin story, as they say in all of these movies that are popular.
Oh, Eric, I have a question. I have a question for you. I want to hear from you. When she said, "Hey, why don't you quit?" What were your thoughts? What went through your brain right at that moment?
I said, sounds like a great idea. Show me the numbers. I said, you show me your books as to what's going on with the business right now, because I did the tax related stuff for the business, but I only did that when it became time for tax time. When the business was operating, Melissa was just doing her thing and tracking her stuff and doing her due diligence as a good business owner. And she showed me the numbers, and I'm like, okay, all right, I agree. Even if I can only do so much to help the company bottom line, either way, I can afford to change. I can afford to change my profession. I can afford to change what we're currently doing now to something that's more family friendly for us, to something that works better for us and our schedule, so that we can spend the time that we want to spend, not only with each other, but also, with our boys. So I gave my final notice to work in December of 2019. I took a month off from doing nothing during the entire Christmas time, and then me and Melissa started working together in January of 2020. And then COVID hit. And I was like, I'm so happy I'm out. I don't have to deal with any of this. I can sit and I can watch this all from the sidelines and not be involved. But, Melissa is absolutely right. It was one of the best decisions that we made as a couple, but also as parents, to say, okay, what's the bottom line? How much does one of us need to make for our household to survive? And how do we build off of that? And that's where we went. That's basically what we boiled it down to. How much do we need to make it on a monthly basis? And then we'll start building from there forward. It's been going quite well since then.
That's great. I'm so happy for you guys. And you made it to the New Year's Eve party, right?
We did. The friends that we went with actually ended up getting divorced quickly after that New Year's Eve. So really, we made it to the last part.
Made it.
But I think it's important for listeners to understand, especially those that are parents out there, your kids are watching. They're watching what you do. You're setting an example. We talk about even generational wealth. You're setting an example for how they're going to interact with their kids as well.
Yeah. Well, so I quit my corporate job 3 years ago, and have been ever so grateful to have that time freedom. I own 2 businesses now, and I work like crazy and I do a lot, but I have time freedom. I can decide when I'm going to work and when I'm not going to work. So when my son has his tennis tournaments in the middle of the day on a Tuesday, I go. Just last week, I was at one. It was on a Tuesday. And I was there and I was able to watch the whole thing. I had to go take one call in the van for about an hour. But other than that, I was able to be present and watch the whole thing. And I looked around at his teammates, and the majority of the teammates' parents were not there. I feel sad that other people don't have the same time freedom to support their kids. I don't know about you, but when my kids got to be teenagers, I had this panic moment where I was like, oh, I have 3 short years or 4 short years left with them, and it's going to go by so fast. And so I have this, I don't want to miss a thing, right? I don't want to miss anything right now because I know it's going to be gone before you know it. That was really important to me.
The teenage years are when it's really important. It's really important to be around as a parent. It's really important to know who their friends are. It's really important. And you do. I mean, when that baby's born, you've got 18 summers to spend with them. And I heard that, and it still kind of chokes me up a little bit. There's nothing that's worth it. That is our story, and we are really excited.
I love that. And to our listener, right, if you are on the verge of making that change in your own life, you've got teenagers and you are ready for time freedom, just follow us, right? Follow Melissa and Eric's example. You can do it. You have skills. And the cool thing about it is after you've been working for 20 years in a certain field, it's not that difficult to move what you know already into your own business. And so just want to encourage you to take that leap of faith if you need to take the leap of faith, but you absolutely can do it. And we're going to dive into some tax strategies that are going to help you feel a little bit more comfortable to do this, that you're not going to be panicking about finances and things of that nature. Of course, you need to do a business that has good revenue, but once you get that revenue coming in, there are some really cool strategies that we're really going to dive into to help you navigate that so you can keep more of that revenue. I just have to laugh because one of my teenagers started her first job and she was very excited. She talked about like how much she's going to get paid. She's a pharmacy technician. And so she's getting paid about $20 an hour, which is amazing for a teenager, right? We always encourage our kids to go after skilled jobs, and we're not going to be on the fast food hamster wheel right, at our house. No, we're going after skilled jobs. She got her first paycheck and she looked at it and she's like, what? She was so mad because of the taxes. Like, Mom, taxes are the worst. And I'm over here as a business owner and I'm like, honey, no, taxes are the best. Like, we just have to learn to navigate them and play the game, right? So it's all about figuring out the game, play the game, and let's win the game. So, Melissa, Eric, we are ready for all of your knowledge. What are some tax strategies that a business owner can utilize to really win the tax game?
Before we jump into strategies, especially if you're talking about the thing that you can do that can be the most advantageous as far as saving money on taxes, I encourage your listeners to really wrap their head around that owning your own business is by far the biggest thing that you can do as far as tax advantages. If you are a W-2 employee, yes, there are certain things that you can do. And then there's actually quite a few things that you can do, but we're limited as far as, tax professionals and how we can advise our clients that are W-2 employees, especially if you're a high wage earner W-2. So I just urge you, if you're on the brink of thinking about starting a business, really get serious, kind of pen to paper, write out that business plan, write out what you think it would look like. I even dare to say, be willing to take that leap. That's the first thing.
Mm-hmm.
The other thing I would say is taxes are, for most people, the single biggest expense that you have. And when you think about that and you really look at it, start to look if you're a W-2 employee, start to look at what's coming out of, even for a seasoned person who's well-versed, when you think about that and look at those numbers, it's pretty crazy to see how much is going out in taxes. So if you can do anything that puts you to where you're dealing with pre-tax dollars as a business owner versus post-tax dollars as a W-2 employee, you're ahead of the game. One of our favorite is, of course, the Augusta Rule, or the 14-day rental rule. That's something that you and I kind of briefly talked about before the show. And just to, we can't get too into the weeds on it, but essentially, it's, of course, completely legal. We're not talking about anything that's even pushing the line, but it allows you as a business owner to rent your personal residence for up to 14 days a year from yourself as a person. So money is therefore transferred from your business and into your own pocket. And that's kind of the theory behind it. So it's a win-win on both. Another one that we really love is hiring your kids. And that's one that I think a lot of people have heard about. It's funny. We will talk to people and we'll say, do you have kids? And the first thing that comes out of their mouth is, oh, yeah, I know I can hire them, but it's too complicated and it's not worth it. And so I'm going to let Eric actually kind of dive into why that plan is worth it, because I really planned kind of the different topics we would talk about when we got on with you. And it was one that I went, maybe it's worth it to talk about, maybe it's not, but I think it's worth it to talk about.
Yeah, I'll take the baton from here. First and foremost, stop listening to people that tell you not to do something because it raises a red flag. If you are a business owner and you're filing taxes, that's a big enough flag as it is already. So everything else that you do after that is just a little bit of icing on the overall cake. And if you're afraid of getting an audit letter or a letter that's asking for additional information, then you maybe should be working with someone that you talk to not only during tax season, but maybe outside of tax season to actually have the time to answer some questions and to help you come up with some additional strategies. You talk to a tax preparer during tax season, you're going to get a cookie cutter, fast response that they're giving just about everybody, because everybody's asking during tax season, how do I reduce my taxes next year? Yeah, do this. It's a cookie cutter response because we don't have the time to answer these questions.
And they're exhausted, stressed, overworked. Like, I don't ever talk to my tax professionals in March and April. I leave them alone because I know it's just way too much. Like, we have our in-depth conversations in June.
That's June, or maybe October, or maybe November before the end of the year actually occurs. That's the time to talk to your tax person. Don't be afraid. If you get a letter from the IRS, provide them the information. Don't ignore it. Don't get the second letter asking for the same thing. Because remember, government agencies, when they smell some smoke, they assume there's fire. So I'm going to leave it on that point. I'm going to dive back into first with kids. Your kids should know how to not only track, generate, but make good financial decisions, and they can do it while watching you. Hire them into your business. Pay them. Have a portion of those wages go maybe into a Roth IRA account that's building for them as they're young. And you're the custodian of the account. No one touches it. You don't allow anybody else to touch it. And you grow it. Imagine 10 years, 15 years, starting when they're first born, 18 years of Roth IRA growth. Come on now, everyone. That's a fantastic idea. And you should be, because it gives them the option of going to school somewhere. It gives them the option of buying their first home. It gives them more financial independent freedom than maybe you even had at the same age. Hire them. Teach them about your business. Have them clean the shop floors. Have them go pick up trash around your job site. Have them shred documents or mail things for you. Have them do something for you. Have them do things for you and learn about how to not only generate income, but also then be responsible in making sure that everything gets paid because of the income you generated. Write them off. The value is something that it gets adjusted every year by the IRS, but a young one in your household could potentially be worth upwards of $12,000 or $13,000 as a business deduction for a sole proprietor, like right off the bat. You can't pass that kind of deduction up. You really can't. And you're like, well, what if my young one is really young? Do an ad campaign. Do a media blitz. Go get some family photos professionally done. Have the kids doing things that may be associated with the business. I saw the cutest photo. This girl must have been 3 years old, blonde hair, pigtails, little pink cute dress, and she was putting things into a paper shredder. And the company used that. They did online security. The family was involved in online security, and that was one of the caption photos that they had on their website. I loved it. Absolutely adorable. There are ways to incorporate your young ones into that. So don't worry about that. Talk to your tax preparer outside of tax season. Find out how to dot the I's and cross the T's and make sure that your deduction is secured. So if the IRS sends you a letter, you write a very brief and polite response. You provide them with the data that they're asking for, and then they send it off. Because remember, government agencies like the IRS, they are not necessarily in the business of losing money for Uncle Sam. They're in the business of generating revenue for Uncle Sam. So they do a cost-benefit analysis whenever they start to send out letters to people, right? So keep that in mind. When it comes to the Augusta Rule, you really need to wear two hats in that situation. The one hat that you have on is that you are the property owner. And the other hat that you would put on is you're the business owner. If you are a business and you're looking to do a business event of all stripes, you're going to go shop around for venues that not only you like how it looks, maybe it's in a great area, they've got good amenities, things of that nature. And then you put your property owner hat on, your homeowner hat on, and you go, I have a great house. I've got a trampoline in the back. I've got a blow-up house in my garage. I got a pool. I've got darts and I've got water balloons and I've got axe throwing in the side yard. Oh, by the way, that's our house. So we have events here at our home. I went and found fair market value for venues that were about the same as my home. And now, whenever a business, no matter what business it is, wants to have an event at my house, I charge them a daily rate, flat out. That's it. And then the business goes, you know what? That's a good venue. I'm going to pay that price. I'm going to write a check for it. And then once that check is in my homeowner hand, I deposit it, and I don't have to report it as income because you can rent any and all of your personal property up to 14 days and not declare it as taxable income. It's been ratified in tax court. There's tort law that has supported it, and it's been in place. Most people aren't aware of this. It's been in place for over 56 years. Wow. So it is not something new. It is not a shiny little thing that came across over the last 5 years from all the COVID tax changes or TCJA or any of those other things. It is something that has been in effect in the tax code for decades. And the highest use I saw was a California politician rented out a home of one of their biggest donors. And the daily cost for the use of that donor's home was $180,000.
Oof.
Right.
Whoa.
So that's big money. For a 3-day event, $180,000 for a 3-day event, that is huge. And it was in the same zip code where you got Pebble Beach and you got all these other places. So don't think that your Augusta Rule deduction of $28,000 is something of significance. I mean, it is to you, but in the overall scheme of things, it's a drop in the bucket in comparison to what other corporations, what other high value or high wealth individuals are using in this same realm. You use it for you use it for $15,000, $12,000, $24,000. That's fantastic. And it counts as a rent deduction for the business.
Is there a limit for it?
14 days.
14 days. But in terms of a dollar figure, obviously not, because someone else did 180,000 a day, right?
Fair market value.
Okay.
I always tell my clients, we're always looking at doing something as a fair market value, because then you can argue to an auditor, you can argue in tax court. I went and got 3 quotes for 3 properties that were similar to mine. This is the median average value of those. And this is what my business was charged for this expense. It's hard to argue when you have a fair market value average.
There's 2 excellent ones, right? Hiring your kids, the 14-day rental rule. Other one that I would say that we find ourselves recommending a lot, and again, it would be assumed that somebody who's a somewhat seasoned business owner would know this or already be doing this, is to, become a corporation. The tax savings and the difference between being a sole proprietor and becoming an S Corp or maybe even a C Corp, although we're in most cases more fans or in favor of the S Corp, it's huge, right? You automatically get rid of that 15.3% self-employment tax. There's 3 really good ones, but what I can say with all 3, the key is not, is it a legitimate tax write-off? Yes, they're all legitimate tax write-offs. Yes, they're all legitimate tax loopholes. Is working with a professional who understands your objectives. And I think that not that we're trying to toot our own horns, but, of course, feel free to reach out to us, right, if you want a consultation. But I think the number one is having a tax professional that you are working with before the fact versus after the fact. Because after the year has passed, which is when the majority of people are talking to their tax professionals, after the year has passed, we're pretty limited as a tax professional from our side of the table on what we can advise clients to do. We're looking at what they've done, in that case, and kind of figuring out, okay, this is what you've done. This is what we can do with that. If you have a client from our perspective that you're able to work with throughout the year to be their partner, that's where the magic happens. And that's how we've really created the magic, I guess, for our clients. Our goal is to help our clients reduce their taxes generally 30% or more from what has been done with their previous preparer. Now, sometimes their previous preparer is themselves and they're trying to do it themselves.
Mhm.
If you're a do-it-yourselfer, I'm going to say right now, and Eric, chime in if you disagree or agree, don't try to do these strategies if you're trying to do it
Just
yourself.
don't. Yeah.
Don't, because it's really all about, it's not that we don't think you're smart enough, we do, but it's really all about documentation and having the right documentation and executing it in the right way so that you don't raise any red flags. Eric loves to say, and I agree with him, that just by being a breathing income earner in any case, you have the potential to be audited and have red flags. Really, you can put a bit of a target on your back if you implement anything in the incorrect manner. So hire a professional and somebody that is willing to work with you before the year has come to an end, and not it is just acting as kind of an order taker after the fact.
Yeah. I think there's a big difference between someone who prepares your taxes in April and someone who is a tax strategist. And when you become a business owner, you 100% need a tax strategist because it can be intimidating. You're launching a business, you're trying to figure out QuickBooks, you're trying to figure out invoicing, you're trying to figure out how to get clients to pay you, how to pay your vendors. There's a lot of moving pieces and your brain is kind of on overload. But if you don't pay attention to the tax part of it, you're going to be in a world of hurt at the end of the day, right? And so having a tax strategist, someone who is on your team, I consider my tax strategist a member of my team that I can call at any moment and say, hey, let's talk about this. I mean, last December, like you said, December is a great time to talk with your tax strategist and understand, okay, are there some things that I could do? And it was, hey, well, does your business need a new vehicle? Because there's a big tax deduction for having a vehicle too that you can take advantage of. And so we were discussing it and trying to figure it out if it was worth me rushing out and buying a big old vehicle, right? Like, what does that mean for the business, but also on the tax side? So there's a lot of different ways to think about that. So what advice would you give for business professionals, maybe a new business owner who is a little bit deer in the headlights about taxes right now? What would you say to them?
Talk to more than one if you're able to reach them. Don't try to reach a tax person during tax time. It's a loss. You'll reach out to 20 and one might get back to you. It needs to be outside of tax season. Reach out to them. You don't go to one doctor and then, that's kind of it. Maybe you go to one or two doctors, get some second opinions. You're interviewing them. You're interviewing them for a job position within your company structure. So do it right. Have questions on hand, and don't necessarily rely on an education that is purely fueled by Google and TikTok. You got to review and do more things. Not all tax preparers are of the same cloth. Not all tax strategists feel the same way, and not all CPAs look at tax deductions in the same light. You've got a lot of tax preparers out there, CPAs, enrolled agents, whatever level they have. And many of them don't like the Augusta Rule. Why? Because they understand that if it's not done correctly, it's something that can be easily dismantled. Why would they want to put themselves in a position where they know that the client is going to fail in that area unless they hold their hand all the way through the process? On the flip side, I don't mind holding my client's hands through the process and walking them through it and have them showing me their homework and documentation. That's what I do during my strategies. I don't do a strategy where you pay me money and I send you a PDF that, 365 pages long that gives you nothing but dry rote instructions on how to do these strategies. I'm actually going to take the time. I'm going to have a meeting with you. I'm going to give you homework. I'm going to have homework. This is a cooperative effort because I want to make sure that not only you understand why you can do the deduction, but how to get to making sure that the deductive will stand up to inquiry.
This reminds me of just also for our listener, I just want to encourage you that it's really important to surround yourself with smart people, right? Because sometimes I look at my business and I'm like, well, I don't know how to be an estimator on this construction project. And so we recently hired someone who is very good at estimating. And so you surround yourself with people who are smarter than you in certain aspects. And that's how you build a rock solid business. And don't be afraid to pay those people either, because sometimes also as a business owner, you're watching the financials, you're trying to navigate that. But these trusted advisors are ones that you do need to pay, like people like lawyers, accountants, tax strategists, all of those. I pay well for those people because those people give me really good advice. Like, I'm not interested in cheap advice. so so it's important to budget that into your cost. And it's absolutely a business deduction, right? Like, the business deductions are fantastic. And so I think the other cool thing about business ownership is it kind of flips the script on when you pay taxes, because as a W-2 earner, you get income, you pay taxes, and then you can spend what's left over. As a business owner, I can flip that. I get income coming in, I can spend, and then I pay taxes on what's left over, right? And there's a couple of nuances, of course, in there, but that's pretty powerful in and of itself. Outside of these very specific strategies that we've talked about today, there's just the overall strategy that you get to spend before you pay taxes. And so therefore you essentially have more to be able to spend, right, than you would if you're a W-2 earner.
With a lot of clients every year, and they are in that same situation. They're business owners, and they would say, you know what, I would rather have a little bit higher of a tax bill and have a lot of cash on hand to continue doing business and pay my tax bill at the due date rather than throughout the year, because I want to have capital on hand to invest in another property. I want capital on hand so that I can make other business decisions and make investments so that I can generate more money to then pay, down the road. And I work with those clients a lot, and I help them plan it out and structure it so that they don't necessarily, they know it's coming. That $50,000 tax bill, they know it's coming. But they have been using the $50,000 rather than paying it throughout the year. They've actually been using it to generate additional income. So that $50,000 made them, let's say, another 10%. So that's an extra $5,000 in their pocket. And then they use that same $50,000 and then they pay the tax bill.
Mm-hmm. Yep. Because that's what the government does with our money, right? we pay them early. They just use it to make money on our money. So why shouldn't we do it first, right? That's the whole thing.
I want to go back to one of the questions you asked, and I loved Eric's advice. I actually really always love his advice. I feel like when you get to work alongside your life partner and your business partner, there's so many different things that you get to learn from each other. He really talks about the tax aspect, and I know that that's kind of our topic here, but I don't want to ignore the importance of staying on top of your finances, because really nobody knows your financial situation. We have clients that have, let's see, I have one client on the bookkeeping side that has, I think, 32 different accounts that they have financial transactions coming out of. And they're, do I think that they have probably more accounts than they need? Yeah, in some cases I do. But I think that a lot of their accounts are necessary and they have them for different purposes. But you need to track what's going on with your life financially. And that doesn't necessarily mean, people laugh when I say this, because half of our business is, accounting services, so bookkeeping services. But I'll be the first to say, it doesn't mean you need to hire a bookkeeper. It just means that you need to take the time on a regular basis. And I highly recommend, using a product like QuickBooks Online. I should get paid for how many times I've plugged QuickBooks Online, but I recommend using an accounting software, not an Excel spreadsheet, that will allow you to track your expenses in all of those different categories, not just for tax purposes, but so that you can see how your business is performing financially on an ongoing basis throughout the year. So it really all ties into this theme of take the time to do some proactive planning with a tax strategist throughout the year. And I'll pause there and say, not all tax preparers are tax strategists. In fact, most tax preparers are not tax strategists. And stay on top of your finances throughout the year. If you spent $100, $500 out of your personal wallet on something that's an actual, an expense related to your business, make sure you're keeping track of that. If you just wait until end of the year or the beginning of the following year to kind of try and gather everything up, you're leaving money on the table. Lots of money on the table because you forget. It's like a cram session for a test. You may pass the test, you may be able to file your taxes without a problem, but you're leaving money on the table. And the IRS is never going to call you and say, hello, I think you missed some deductions. Never heard of that.
Nope.
And if they do, it's definitely a scam. So beware.
That's right. That's right. That's right. Yeah, I love that point that you bring up. It's important to be diligent about it. And it's not something that comes naturally to most people. I've been fascinated with finance and money probably my entire life. And so I became the CFO of our family as soon as I got married. We started having kids and I just really enjoyed tracking it. But I know that's not the experience of the majority of people. They don't enjoy tracking their money. They don't enjoy understanding where it's going. But I feel like it paints a really amazing picture and can tell us like the data of your financials can give you some really interesting information about what business decisions you can make next. And so that's what I really enjoy about the financial tracking. And yeah, it's super important to do it. You can do it yourself. I don't think I would do the best job of it myself, especially now I'm running a company that's a 7-figure company. It's just, there's a lot of money flowing in and out. And so I do hire a bookkeeper to help me with that. And then I meet with that bookkeeper twice a week. We spend at least 2 hours a week together reviewing it, understanding it. One session's our invoicing session that we're sending invoices out to clients. Another session is our accounts payable, where we are figuring out what vendors we need to pay and our contractors and things like that. It's super helpful to keep a really clear eye on the financials. And I love my bookkeeper because he's very nitpicky and very anal about it. And I'm like, that's perfect. That's perfect. And that's what you need. Someone like that who's very anal about the numbers. So
figure out a way to outsource it to somebody who that is what gives them joy. On the topic of finances, obviously your business is in a category where there's lots of moving parts and there's lots of things going on. And I applaud you for having a bookkeeper. And I'd love to even applaud you even more for the fact that you are regularly interacting and participating with that book, because it's really difficult, just like it is for a tax preparer. It's very difficult to do our best work if we don't get participation from the client. So kind of have to figure out what the sweet spot is for you and then find professionals that will match what you're looking for.
I agree. Well, Eric and Melissa, thank you so much. This has been fantastic. Do you have any other last pieces of advice for someone who either has their own business now or is looking to start their own business?
If you have your own business, I say once a year, look at your business plan. If you don't have a business plan, definitely write a 1-page business plan so you know what your objectives are, who you want to serve, but you also kind of know financially what you're hoping to gain from your business. That's been, for us personally and for our clients, that's been so huge. Be willing to update that business plan on an annual basis. And if finances, whether it's bookkeeping or taxes, are not something that you're either happy with your current professional or feel like you're getting as much as you would like to get, reach out and start shopping.
Eric, do you have something to add?
Don't be afraid to reach out and talk to fellow business owners, talk to people in your circle. You have more resources than you realize, especially if you start reaching out to friends and family saying, hey, I'm doing this. I'm trying to figure out how to do it. Do you got any suggestions? Do you know someone that I can talk to? Outside of that, you can go to Busy Bee Advisors. You can always go. We have lots of free things up on there for business owners to download and take a look at. We have our podcast that talks about all of this stuff for small business owners, The Real Buzz. take the opportunity to do a little bit of investigation on your own and try not to have your back up against the wall in needing that information. Like, do a little forward planning on that goes a long, long way. So talking to your tax person outside of tax season, that's a great idea.
Yes, definitely. I think one of the things that I suffered from for a really long time was this weird thought I had in my head that I didn't want to look stupid. I didn't want anybody to look at me and be like, she's dumb. And then I interpreted that as I can't ask for help, or I can't admit that I don't know what I'm doing. And I had to work so hard on that mindset shift to get to where I could be back to infant brain. And so what I've done is I've convinced myself that it's okay to be an infant, meaning you don't know. If you have never run a business before, you don't know how to do it. And it's okay to ask for help. And nobody's going to think you're stupid. People are going to applaud you for even trying. And so I think it came in all of the trying. That's where confidence really builds, is when you're trying again and again and again and again, and then you get there. So yeah, to our listener, please reach out to Eric and Melissa. They are excellent resources for you. You can reach out to any of the podcast guests that we have here at Quiet Wealth. I know whenever I'm a guest on a podcast, I love it when people reach out to me, say, hey, you know what you said resonated with me. I'm struggling with this issue. Do you have some advice? Absolutely. You know, I would be ecstatic to be joined to ask for advice. And so I know Eric and Melissa the same, because that's what we do, right? On these podcasts. The reason we have podcasts is to help you. And you can't always just get the help you need just by listening to us chat, right? Because you have a very specific circumstance that you may need help with. So please reach out. Eric, Melissa, where's the best place for them to find you?
busybeeadvisors.com.
Perfect. Thank you so much for joining. And to our listener, thank you for being here. We appreciate you at Quiet Wealth. And I just want to remind you that we need to share this education so we can share the wealth. So please share this episode with a friend you know and love so that they can also have the benefit of this education. Bye for now.